Welcome back, everyone. We're diving deep today, taking a look at Nomad Investment Partnership. You know, the one run by Nicholas Sleep and Quisacaria.
Yeah, it's really a story that I think deserves more attention than it gets.
Definitely. I mean, they had a CAGR, that's compound annual growth rate, of about 20% for 13 years. That beat the market, and even Warren Buffett's Berkshire Hathaway.
And on top of that, their fee structure was incredibly unusual. They only charged a management fee after exceeding a 6% hurdle rate.
Really?
Yeah, and even more interesting, they actually refunded parts of those fees if they missed that hurdle in later years.
Huh. That's wild.
And
They really went all in on their investors doing well, huh?
seems that way. A big part of their success, though, was their scale economic shared investment philosophy.
Okay, so what exactly is that?
Well, the idea is they targeted companies that were amazing at leveraging their scale to get the absolute lowest prices from their suppliers.
Right, makes sense. Kind of squeezing the most out of their size.
Exactly, and then they'd pass those savings directly to their customers. Lower prices meant more growth and customer loyalty.
Oh, I see. So it was like a cycle. Lower prices, more customers, even lower prices.
Yeah.
But how often do you see that really play out? Can you give me some examples from Nomad's portfolio?
Oh, absolutely. Think about companies like Costco, Amazon, and Dell.
Okay, those are some big names for sure.
Yeah.
But how did they fit the model?
Let's start with Costco. They've got this incredibly high revenue per square foot, like way higher than even Walmart's Sam's Club.
Yeah, Costco's impressive. Their whole membership model and bulk buying thing, that just seems to feed right into scale economics shared.
You got it. And then there's Amazon. Under Bezos, they were constantly lowering prices.
Which is kind of crazy when you think about it. Most companies are trying to raise prices as much as possible.
Exactly right. But Bezos believed that lowering prices, even if it meant sacrificing some short-term profit, was the real key to creating long-term value.
Hmm, interesting. So it's about playing the long game, huh? But how does Dell fit into all of this?
Oh, Dell's a great example. They were way ahead of the curve with their direct consumer sales, cutting out all those middlemen.
Right, cutting out the middleman, gotta love that. Lower prices for everyone.
Exactly. And they were also early adopters of really efficient supply chain management, so they were offering really competitive prices while staying profitable.
So it seems like Nomad was really good at spotting companies that were shaking things up, disrupting those traditional business models, and putting the customer first. But how did they actually decide which companies to buy? I mean, what were they looking for?
One of their big things was this 50 cents on the dollar rule.
50 cents on the dollar. What does that mean?
Basically, they wanted companies that were priced at half of their intrinsic value.
So they weren't just looking for good companies, they were looking for steals.
Yeah. Great companies at bargain prices, that's what they were after.
Sounds like classic value investing to me.
Yeah.
But how did they actually find these hidden gems that the market was undervaluing?
Let me give you an example. Back in 2003, they invested in Weetabix, the UK breakfast cereal company.
Okay, Weetabix. So what was so special about them?
Weetabix had this super strong brand, a huge market share, and they had a history of putting profits back into the business. But for some reason, the market just wasn't giving them the credit they deserved.
So it sounds like the perfect opportunity for Nomad to swoop in and scoop them up.
You got it. They saw a high-quality business selling at a discount, and they jumped on it. It was like buying a dollar for 50 cents.
I like it. So they mostly looked for companies with these, like, long track records. Or were they ever into those younger companies?
Yeah.
The ones with maybe more potential, but also a lot more risk?
They were definitely open to younger companies as long as they met their criteria, scale economics shared, strong management, a path to long-term value, all that.
So it wasn't just about finding a cheap company. It was about finding a company that could grow and become much more valuable, no matter how big or small they were at the time.
Precisely. Speaking of undervalued companies, remember their investment in Xerox in 2009?
Oh, yeah, right after the financial crisis.
Yeah.
A lot of investors probably wouldn't touch a company like Xerox at that time. Way too risky.
Right. But Nomad, they saw things differently. They really dug deep into Xerox's financials, looking at things like free cash flow, debt levels, R&D spending.
They did their homework.
Oh, yeah. And they figured out that despite all the chaos in the market, Xerox was trading for way less than it was actually worth.
So they saw an opportunity when everyone else was running scared. That's bold.
Yeah.
It must take a lot of confidence to go against the grain like that.
It does. It's about having the discipline to stick to your principles and the guts to act when others are, freaking out.
Makes sense. So we talked about how Nomad bought companies, but how about selling? When did they decide it was time to cash out?
Well, usually their decision to sell was triggered by a big change in that price to value ratio we talked about.
So if the market caught up to their valuation of the company, they might sell.
Exactly. They weren't playing those short-term games. Their decisions were based on the fundamentals of the business.
Got it. Can you give me an example of that in action?
Sure, let's take Stagecoach, the UK transportation company they invested in. Initially, Stagecoach fit their investment criteria perfectly.
Okay.
But over time, the management started prioritizing short-term profits over long-term value.
So they basically went against that whole scale economic shared
Yeah.
thing that Nomad loved so much.
Right. And Nomad, they saw that shift and decided it was time to sell. It probably wasn't an easy decision, but it shows how committed they were to their principles.
It's interesting, right? Their selling was just as important as their buying. They weren't afraid to walk away if things weren't going in the direction they wanted. Were there any other things that could make them sell?
Oh, yeah. They also watched out for what they called dilution risk. Like when a company issues more shares, each share becomes worth a little less.
Right, I know that feeling.
So let's say they saw a good company, but they thought that company might need to raise capital soon by issuing more shares. Nomad might decide to sell to avoid that potential dilution.
Smart. So they were always thinking about how to manage risk, even if the company itself was doing well.
Absolutely. It's all part of being a great investor. But it's not just about buying low and selling high. It's also about how much you invest in each company.
Oh, right. How did they figure out how much to put into each investment?
They use something called the Kelly formula. It's this mathematical model that helps you determine the optimal bet size.
Kelly formula, huh? That sounds complicated. Can you break it down for me?
Basically, it's all about balancing risk and reward. It tells you how much to invest to get the most out of your potential wins while also minimizing potential losses, especially when you have a concentrated portfolio like Nomad did.
Ah, okay. So it's not just about picking the right stocks, it's about managing your risk.
You got it. And that leads us nicely into the whole concept of portfolio management. How did they navigate different market conditions and adjust their portfolio?
Yeah, especially during something like the 2008-2009 financial crisis. That must have been a crazy time for investors. How did they handle that?
Well, they stayed true to their long-term focus and actually saw the crisis as an opportunity. They took advantage of those depressed prices and increased their investments in high-quality businesses.
So they were buying when everyone else was selling.
Exactly. They had this incredible quote in one of their letters to investors. It may not feel like it, but for a long-term investor, this is the best of times, not the worst. Take heart and look to the horizon.
Wow, that's pretty inspiring. They weren't just surviving the crisis, they were using it to their advantage.
You got it. They understood that market downturns, while scary, can create some incredible opportunities for disciplined investors.
That's all about having the patience and the courage to weather the storm.
Right. Exactly. Now, switching gears a bit, let's talk about that whole active versus passive debate in investing. We know most active fund managers struggle to beat the market, often underperforming those passive index funds. Why do you think that is?
Yeah, that's a good question. Why do so many of them fall short?
Well, there are a few reasons, I think. First off, high fees can really eat into returns. Then you've got that short-term focus that a lot of them have, which can lead to rash decisions. And a lot of active managers just aren't truly diversified. Their bets are spread too thin.
So they're trying to do too much and end up diluting their focus.
Exactly. Nomad, they did the complete opposite. Their portfolio was highly concentrated, holding just a small number of positions that they really understood and believed in.
Right, it was all about that high conviction approach we talked about earlier.
Yeah.
They really put their money where their mouth was.
They did. They believed that true diversification comes from deep knowledge, not just owning a ton of different stocks for the sake of it.
So it's about quality over quantity. Focus on what you truly know and believe in.
Yeah.
I like that.
Exactly. And that's one of the key reasons why they were able to consistently beat the market, I think. They weren't afraid to be different and challenge the status quo.
Okay, so we've talked about their investment philosophy, their buy and sell decisions, their risk management, and even this whole active versus passive debate. But here's the big question. Why did they close Nomad? I mean, they were killing it.
It might seem counterintuitive, but Sleep and Zakaria decided to close the fund in 2014 because they felt they'd reached their goals and wanted to shift their focus to philanthropy.
So they walked away from the world of finance to do something more meaningful to them.
Right. They were also a little worried that growing even bigger would hurt their performance. Managing too much money could force them to compromise their investment approach.
Wow, that's really interesting. Most fund managers are obsessed with getting as much money as they can, but nomads seem to prioritize their investors' returns and their own investment philosophy above all else.
Absolutely. They even considered using a redeemable share structure for future fundraising. It would let them adjust the fund size if they didn't have enough attractive investment opportunities.
So they were always thinking about how to do right by their investors, even if it meant leaving money on the table. That's a pretty impressive level of integrity. But what happened after they closed Nomad? Did they completely disappear from the investing world?
Not entirely. Nicholas Sleep went on to start the IGY Foundation, a philanthropy focused on education and promoting long-term thinking.
Okay, so it sounds like he's taking those same principles he used in investing and applying them to philanthropy.
Exactly. And get this, I read that the IGY fund only has 3 investments.
3? Seriously?
Yep, just 3.
That's incredibly concentrated, even more so than Nomad's portfolio. Why only 3?
It's definitely a question that makes you think, what are these 3 investments? Why this hyper-focused approach? It's almost like he's taking that same high conviction, long-term philosophy from his nomad days and using it in his philanthropy.
It's almost like he's treating philanthropy as an investment itself.
Exactly. Carefully selecting opportunities where he sees the potential for real long-term value creation.
That's super interesting. It definitely leaves us wanting to know more about those 3 investments and the thinking behind them.
Absolutely. Maybe that's something we can dig into in the next part of our deep dive. There's still so much to uncover about Nomad and their approach to investing and even life.
Yeah, I'm with you on that. But before we move on, I want to go back to that redeemable share structure you mentioned. Can you explain that a little more? It seems like a really cool idea, especially with how the market is these days.
Yeah, sure. So this redeemable share thing was something Sleep and Zakaria were thinking about for the future at Nomad. Basically, it would have given investors the option to redeem their shares at a certain price and, at certain times.
Huh. That's pretty different from how most hedge funds work. Why would they even consider something like that?
Well, they were a little worried about getting too big, remember? They closed Nomad, partly because they were concerned about having too much money to manage, potentially diluting their whole investment philosophy.
Right. They didn't want to mess up their performance or let down their investors.
Exactly. The redeemable share idea would have given them a lot more flexibility. Like, if they couldn't find enough good investments, they could just let investors cash out, basically shrinking the fund and preventing them from making bad bets just because they had all this money sitting around.
Ah. So it was a way to manage their capacity and protect their investment process. It also shows they really cared about keeping their investors happy. Not many fund managers would be willing to give up that much control.
Totally. It really showed how much integrity they had and how much they believed in transparency. It really makes you think about how things might have been different in the hedge fund world if they had actually done it.
Yeah. It's a shame they closed up shop before we could see it in action. But I guess that's part of what makes Nomad so interesting. They were always up for doing things differently, even if it meant walking away from profits.
Absolutely. Their story is a good reminder that success isn't just about the money, it's about doing things the right way and sticking to your principles.
Well said. Now, before we get to the IGY Foundation and those 3 mysterious investments, let's go back to that scale economic shared thing. We touched on it before, but I think it's worth spending a little more time there.
Yeah, I agree. It's at the heart of Nomad's success, and it's something that applies to way more than just investing.
Okay, let's break it down a bit more.
Well,
What are the key parts of scale economics shared? And why was it so effective for Nomad?
so at its core, it's about finding companies that can use their size and efficiency to get the best possible prices from their suppliers.
Right, that makes sense.
But here's the important part. They then pass those savings on to their customers.
Oh, so they're not just pocketing the extra profit, they're using it to lower prices. I see where this is going.
You got it. Lower prices bring in more customers, which means more scale, which lets them negotiate even better deals and lower prices even further. It's a powerful cycle, but it takes the right kind of company culture and leadership to make it work.
Right, not all companies, even big ones, are set up to work like that.
Exactly. A lot of companies are too focused on making as much money as possible right now, even if it means screwing over their suppliers or charging their customers a lot. That might work for a while, but it's not a strategy that lasts.
Nomad saw that the companies that would win in the long run were the ones who treated their suppliers and customers fairly, sharing the benefits of scale.
Exactly. And they were right time and time again. Just look at Costco, Amazon, Dell. These are all companies that have become huge by embracing scale economics shared.
And they've done incredibly well for themselves and their shareholders, right?
Oh, yeah. And they've given their customers a ton of value, too. It's a win-win for everyone.
I like it. So it's a model that's good for business, good for customers, and good for society. Are there any, bigger lessons we can learn from scale economics shared? Something we can use in our own lives, even if we're not investing directly in companies?
That's a great question. I think there are a few big takeaways here that we can all use. First off, it shows how important it is to think long-term and avoid getting caught up in short-term thinking.
Right, like that instant gratification thing that everyone seems to be obsessed with these days.
Exactly. Nomad knew that building a really great business takes time and patience. It's about making choices today that will pay off in the future. And that's something that applies to all of us, whether we're building a career, saving for retirement, or just trying to live a good life.
So scale economics shared isn't just a business model. It's a way of thinking about life, right? It's about creating value that lasts.
You got it. And another big takeaway is the importance of building strong relationships and creating win-win situations. Nomad understood that businesses don't exist in a vacuum. They're part of a bigger system with suppliers, customers, employees, and communities.
And they thought that by working together and sharing the benefits, companies could create more value for everyone involved.
Exactly. And that's a lesson that applies to all of us, too. Building strong relationships with family, friends, colleagues, even business partners.
So it's about understanding that we're all connected and that we can achieve more when we work together.
Precisely. And finally, I think Nomad's story shows how important it is to be innovative and challenge the status quo. They weren't afraid to be different, to go against the grain, and do things their own way.
And that willingness to think outside the box is what allowed them to get those amazing results, right?
Absolutely. They were true pioneers, and they left behind a legacy that should inspire all of us to think differently about business and investing.
Well said. Okay, I think we've done a good job unpacking scale economics shared now. Are you ready to dive into the world of philanthropy and see what Nicholas Sleep has been up to with the IGY Foundation and those three mysterious investments?
Oh, yeah. Let's get into that. It's a really interesting part of their story, and I'm curious to see what we can learn.
So the IGY Foundation, right? It's all about education and promoting long-term thinking, which honestly seems like a pretty natural next step from Nomad's investment philosophy.
Yeah, for sure. And the fact that they've only got 3 investments is just wild to me.
It is. I mean, that's super concentrated, even more so than Nomad's portfolio. What are these three investments and what's the story behind them? Like, how do they end up with just three?
That's the thing. We don't really know the specifics of the investments. Sleep's been pretty private about the foundation's activities.
Yeah, that makes sense. A lot of philanthropy involves stuff that's kind of sensitive, and I'm sure they want to avoid the public eye as much as possible.
Exactly. But even without knowing the details, we can still, make some educated guesses based on what we know about Sleep and how he thinks about investing.
Okay, let's try that. What kind of investments do you think the IGY Foundation might be holding, knowing what we know about sleep?
Well, he's all about long-term thinking and creating value, right?
Hmm.
So I wouldn't be surprised if some of these investments are in things that might not make money right away, but have the potential to make a big positive impact over time.
So maybe stuff like education, renewable energy, sustainable agriculture, things like that.
Exactly. Areas where he can really make a difference and align his investments with his values. And the fact that there are only 3 suggests that he's really confident in them and understands them deeply.
It's like he's taking that same approach from Nomad, that concentrated investing, and applying it to his philanthropy. He's not just giving money away, he's investing it strategically.
That's a great way to put it. It's a reminder that philanthropy can be about more than just writing checks. It can be about really getting involved in solving problems and creating lasting change.
Yeah, I love that. It's not just about giving money, it's about making a difference. It's a pretty inspiring story.
It really is. It shows that you can be successful in finance and still care about making the world a better place. Those two things aren't mutually exclusive.
I agree. And hopefully that's something our listeners will take away from this too. Whether you're a seasoned investor or just starting out, you can use your financial decisions to make a positive impact.
Absolutely. It's about using your resources and knowledge to do some good, no matter how small.
That's a powerful message. Okay, so we've explored Nomad's investment approach, their incredible track record, and their decision to close the fund. And now we've even touched on Nicholas Sleep's move into philanthropy. What's the one big takeaway you want our listeners to remember from all of this? What's the core message here?
I think the main theme is the power of thinking long term and sticking to your principles. Nomad's success wasn't just about picking the right stocks. It was about having a clear vision, strong values, and the discipline to stay the course, even when things got tough.
They weren't afraid to be different, challenge conventional wisdom, and always put their investors first.
Exactly. Their story shows that real success, whether in investing or life, isn't about chasing quick wins or following the crowd. It's about having a long-term perspective, making decisions that align with your values, and sticking to your guns.
That's a powerful message. What about you? What's the biggest lesson you've taken away from studying Nomad?
For me, it's a reminder that doing the right thing and doing well aren't mutually exclusive. Nomad showed that you can be super successful in finance and still operate with integrity and transparency. They never compromised their values, and I think that's a big part of what made them so special.
I love that.
Yeah.
It's easy to get caught up in making money and lose sight of the big picture. But Nomad proved that you can achieve both financial success and make a positive impact on the world.
You got it. They were true pioneers, and their story inspires me to think differently about investing and the role that finance can play in building a better future.
Well said. Okay, we've covered a lot of ground today. We explored Nomad's journey, their investment philosophy, and their lasting impact on the world. Before we sign off, is there anything else you'd like to add?
I just encourage everyone listening to check out Nomad's partnership letters. They're full of wisdom and insight and offer a really unique perspective on the world of business and investing.
That's a great suggestion. We'll be sure to include links to those in the show notes. And as always, we want to hear from you, our listeners. What are your thoughts on Nomad's approach? How can we apply their principles to our own lives and investments?
Yeah, jump into the comments and let's keep the conversation going. Remember, learning is a team sport, and we're all in this together.
Well said. Thanks for joining us on this fascinating deep dive into the world of Nomad Investment Partnership. Until next time, keep exploring, keep questioning, and keep striving to make a positive impact on the world.
And remember, the journey of learning never ends. Keep diving deep.